Are you always late or missing out on big stock market moves? You see a stock shoot up 80%, 100%, maybe even more. You kick yourself because you were watching it before it made the move, but you didn't get in. Or worse, you got in at the top, chasing the stock as FOMO, fear of missing out, finally got the better of you, and then watched your gains evaporate as the stock reversed. Well, this used to be me. And like you, I found it extremely frustrating. After years of investing and refining my strategy, I discovered one thing that changed absolutely everything. It helps you spot massive stock market moves before they happen, eliminates hesitation, and ensures you catch the trends that others miss. To make this process 10 times easier for you, I'm going to break down my exact method for identifying stocks that have the potential to climb 80% or more before they take off. So listen up. To understand why what I'm going to share with you works, first ask yourself this. Why do some investors consistently catch the biggest trends while others are stuck chasing or losing money? It's because we know exactly what to look for before a stock moves. Makes total sense, right? It's kind of like knowing the signs of hydrogen and oxygen coming together in the right proportions. You know there is going to be an explosion. Today, I'll show you exactly which signs to watch for so you can identify these big movers before they happen. First, let me share with you what I call the big picture strategy. Most traders get stuck looking at tiny price movements on short-term timeframes, trying to guess the next move. This approach is sold as the sexy way to quick riches, which we call day trading. But that's why so many people fail. A great book to read is How I Lost Everything by every day trader that ever lived. Jokes aside, the quicker you move away from the false promises of day trading, the better. You will either blow up your account, and for some of you, not for the first time, or blow out when the stress and the losses get the better of you. Day trading simply does not work. My approach to stock picking transformed completely when I learned to step back, zoom out, and focus on the bigger picture. The biggest stock market moves don't happen overnight. They build up over time, and if you know how to spot them early, you can position yourself before the boom starts, what we call the breakout. I use a 3-screen setup to do this. The monthly chart, this is where we start. We're looking for stocks with a history of massive trends. A stock that has moved up before has a much higher chance of doing it again. If a stock has never trended well, I'm simply not interested. The weekly chart, once we found a strong historical performer, we check if current price action is setting up for another big move. And the daily chart, this is where we confirm what the weekly chart is telling us and where we look for the exact moment to enter. Now, here's a little pro tip for you, which is understanding the secret of consolidation. Decoding this from the thousands of stocks I've studied was an absolute game changer for me. Where most investors mess up, and again, talking from experience, is that they jump into a stock just because it's moving. But movement alone isn't enough. Remember, we want to spot the movement before it happens or when it is just starting to happen, and to do this, we must embrace and seek out periods of consolidation. A consolidation is just another word for a sideways market. Think of a sideways market like the roots of a tree. The longer and thicker the roots, the taller and stronger the tree will grow. And so with the same logic, a prolonged sideways market will lay the foundation for a large market uptrend. So, you know that expression, the longer the consolidation, the bigger the breakout. This is one of my key investing rules, as it helps me to spot the large market moves before and as they are starting to take off. When a stock has a strong history of trends and then goes into a long sideways consolidation, it's building up pressure, like a compressed spring ready to uncoil. When the stock finally breaks out from the sideways market, the move is usually massive. It is far from uncommon to see stocks climb 80%, 100%, even 1,000% plus over 12 to 18 plus months. With a systematic, rules-based process based on the stock's performance and structure, you simply do not need to guess the quality of a stock. It is either a good stock with serious potential or, well, it isn't. You see the patterns forming ahead of time. This allows you to be aggressively prepared for the breakout, which means applying patience for the right setup with the right plan of action in place. Okay, so now that we know what we are looking for, a real important question to ask is, how do we confirm the breakout from the sideways market and the start of the next 80% plus uptrend? Again, very, very straightforward. Once we have a stock with a history of strong trends over 5 to 10 years and currently trading inside a long consolidation period, typically 3 to 6 months as a minimum, which is what we look for, the next step is confirmation, the start of the next uptrend. This is where my proprietary trend filter comes in. First, the weekly trend filter. If this is green, the stock is in a bullish phase. If it's red, there's weakness, and we simply wait. We also use a 200 simple moving average. The stock should be trading above this level, showing that it has momentum behind it. If the weekly chart checks out, we move down to the daily time frame. Now, on the daily time frame, we have the daily trend filter. Again, we want this to be green, confirming the bullish move. And we also have the 200 simple moving average on the daily time frame. The stock should be above this level too. When the weekly and the daily timeframes align, we have a high probability setup and we can look for a precise entry. This method is called multi-timeframe alignment, and it's the key to catching those massive 80% plus moves consistently. And as we are doing this on the monthly, the weekly, and the daily timeframes, we are positioned to catch the big moves, the ones that last months, potentially even years. And here's what's really cool. As the lowest time frame is the daily, I only need to look at the charts once a day at the end of each trading day. My analysis and portfolio management takes just a few minutes a day, which means I can continue to live and enjoy life whilst having smart processes growing and compounding away in the background. I know, clever, right? Now, the obvious question to ask is, why do most investors miss these moves? Well, because most investors make things way too complicated. I know that because I have done that too. The money really is in keeping it simple. And a big part of that is accepting the simplicity of good investing. People crave complexity because it makes us feel better when we understand complex topics. But when it comes to investing in the stock market, it really is counterintuitive. Good investors make good kisses. Now hear me out. We know how to keep it simple, sweetheart. Most overload their charts with unnecessary indicators, trying to predict market moves instead of reading what's in front of them. They listen to the news, follow opinions, and ultimately ignore the most important indicator, which is price action itself. But here's the truth. The stock market doesn't care about opinions. It only moves in trends. To succeed in the stock market, it's important to understand the common mistakes that 99% of investors make and how to avoid them. Watch this video to learn how to stay in the 1% of investors who consistently earn profits.